Hi everyone, I hope everyone is safe at your end. So please stay home and stay safe and take all the precautions by wearing the mask and sanitizing your hands at the frequently. Now, accounting is a beautiful subject, my dear friend, especially accounting standards for CS students. It will be really a wonderful area for discussion. When you understand the standard and the concept which has been discussed in a particular standard, you will get that the glow of knowledge on your face with a smile. I hope I can bring that smile on your face with that confidence. I am recording this video to help in your preparation. You are watching my channel CA.MURALI NAGARAJ classes. I am your CA.MURALI NAGARAJ faculty for CA final as well as intermediate accounts. So come quickly, let's go to the video. Today we are going to discuss earnings per share. For CA final students, it is Ind AS 33 in financial reporting, earnings per share, and for intermediate students, it is a AS-20 in advanced accounts, earnings per share. So what we are going to discuss in today's topic, it is a common between both intermediate as well as final related to AS-20 and Ind AS 33. In Ind AS 33, in diluted EPS, a little extension is there that I will bring to your notice when we go for the relevant area. Come, let us quickly start the standard. As you are aware, my dear friends, in AS 33, Ind AS 33 or AS 20 EPS, we have two types of EPS. One is basic EPS, basic or general EPS. Another one is diluted EPS. Diluted EPS. So basic EPS formula, profits available to equity shareholders divided by number of equity shares. Yeah, so that too not just a number of equity shares, we call it as weighted average number of equity shares. Same way here, diluted EPS formula is equal to same what we have did in a basic EPS, same thing we have to copy, but it is adjusted profits available to equity shareholders divided by adjusted number of weighted average adjusted number of shares, adjusted weighted number of shares, adjusted number of weighted shares, or adjusted weighted average number of shares, what we call. Now, here my dear friends, profits available to equity shareholders means if preference shareholders are not there, profit after tax will act as profits available to equity shareholders. Suppose if preference shareholders are there, then profit after tax, so you have to deduct the preference dividend. So thereafter, what the rest of the profits we have, that will act as a profits available to equity shareholders divided by number of equity shares. So here it is not just a number, here it will be weighted average number of equity shares we have to take. So therefore, first let us have the variety of problems or types of problems which that may fetch in part 1. There is a first variety of problems is, first one, it is they may ask variety of problems is computation of weighted average number of shares. Computation of weighted average number of shares. Number of shares. Second one, they may ask bonus issue. Bonus issue. Third one, rights issue. Rights issue. Yeah, so anyway, you should not forget. So first one is normal. There's a basic EPS computation problem. They may ask basic EPS computation problem, and then computation of weights as well as bonus issue and rights issue. Whenever you touch bonus issue and rights issue, you have to give the restatement of EPS. That means as it is, suppose if the previous year you would have declared the bonus issue or rights issue for the previous year compared to the previous year profit, how much would have been the EPS that you have to restate and compute and show. Now, weights, suppose if it is how weights has to be assigned. Suppose if the shares are issued for cash, then from the date of allotment, weight will be assigned. If it is issued for consideration other than cash, for example, settlement of liability or purchase of an asset, etc., from the date of purchase of an asset, so the date has to be taken for allotment. And for the settlement of liability, from the date of cessation of cash flows from in our book, so from that date we have to consider the wait for the issue of shares for liability. Suppose if it is shares are issued for rights issue. Rights issue is nothing but issue of shares for existing shareholders at concession price. So therefore it will be taken as it is same as like fresh issue, but you have to restate and you have to compute that weightage. Then bonus issue, even though last day you have issued to the existing shareholders, you have to give the weightage in full, because without existing shares we would have not issued the bonus shares. So therefore you have to give the weightage as a full weightage. This is part 1 of earnings per share. Next, when it comes to part 2, my dear friends, it is diluted EPS. Diluted EPS formula is adjusted EPS divided by adjusted number of weighted average number of equity shares, that we will discuss. So this was our complete area for discussion today. Now here dilution means when compared to your general EPS or basic EPS, if it is reduced, then it is called diluted EPS. So that a dilution will occur due to potential equity shareholders. Dilution will occur due to potential equity shareholders. Potential equity shareholders. Yeah. So that means who are all potential equity shareholders? Potential equity shareholders. So that is potential equity shareholders. Potential equity shareholders. Potential shareholders. Who are all potential equity shareholders? So that is number 1, convertible preference shares. Number 2, convertible debentures. Third one, ESOP, that is employees stock option. So these are the cases. So this will come in all 3 cases because of these 3 potential shareholders. Our existing earnings, suppose if they convert into equity shareholders or if they become into equity shareholders, if existing profit for existing shareholders, how much? That is what basic EPS. Suppose out of existing profit, existing shares are there, plus suppose in the future if existing, that whatever the conversion rights is there, if they also become shareholders, how much will be? So that you have to compute and show. So after conversion, that is existing, for example, whatever profit is there, that if you share to existing plus potential shareholders, obviously the earnings per share, the price will be reduced. If it is reduced, then we call it as diluted EPS. Suppose if it is increased, then we call it as anti-dilutive. Correct? Now I can understand, I can read your mind, sir, how it will be increased. For that you have to debug the formula adjusted EPS and adjusted number of equity shares. Now here adjusted EPS. So adjusted EPS, how we have to compute. So before that you have to understand adjusted EPS is nothing but earnings available to equity shareholders adjusted for, on account of conversion, how much you are going to save in a profit or how much you are going to lose it. Yeah. Now look out. If you convert convertible preference shares, what will be saved? If you convert preference shares into equity shares, preference dividend will be saved. So therefore here savings is what? Savings is preference dividend. Suppose if you convert debenture holders, you will save interest. Yeah, you will save interest, but net of tax. Yeah, but you will forego tax benefit. Interest will be saved. If interest is charged in P&L, you would have got the there's a profit will be less, on that you would have saved some tax. But here, suppose if debentures are converted into equity shares, so the debenture interest will be removed from the P&L, so that your profit will increase, on the tax benefit will be lost. So therefore net you have to take in. Sir, your doubt, Sir, preference dividend, if it is saved, means preference dividend also saved, no? The doubt will come, correct? So, sorry, preference dividend, if it is saved, means on that dividend distribution tax also saved, correct? But because of last amendment from the assessment year 21, so it is dividend distribution tax has been removed. So that was taxable in the hands of assessee. So therefore, I have not taken that the dividend distribution concept here. Only dividend, so whatever I supposed to pay to preference shareholders, that will be saved. Because of that, my profit will be increased. There's a profit available to shareholders will be increased. Next, ESOP. On account of ESOP, savings is nil, because out of profit only you have to give, out of your pocket you have to give to the shareholders at a free of cost. Free shares you have to issue. So therefore, savings is nil. Now, let us go on how adjusted profits available to equity shareholders and adjusted number of equity shares we have to compute. Now here, diluted EPS is equal to diluted EPS formula is equal to adjusted number of equity shares. Correct? Sir, adjusted number of, adjusted profits available to equity shareholders. So that adjusted profits, how to calculate? So that means first you have to take profits available to equity shareholders divided by weighted average number of equity shares. That is existing. This is existing. So for this, suppose if preference shareholders converted into shares, what will happen? If preference shareholders converted into equity shares, you will save preference dividend. Preference dividend will be saved, therefore profit will increase. That's the profit available to equity shareholder will increase, as well as in a denominator on conversion of preference shares, how many number of shares you have you bound to issue to equity shareholders, that will come. So therefore, shares issued for preference shareholders, what shares you have issued, that shares will come. Next, continue. Suppose if you convert debentures, savings will be interest minus tax, that net interest savings in interest will be increase, and on account of conversion of debentures into equity shares, so that is number of debenture holders, shares issued to debentures holders will come. Yeah. Now next, the third one, suppose if ESOP is converted into shares, means only look out, savings is nil, nothing will be saved, because out of profit we are giving it free of cost, therefore nothing is saved. But here number of shares will increase, because if I give the shares, obviously equity shares will increase. So therefore, number of shares issued for no consideration or free of cost. We should without consideration. This is what you have to take. Correct? Sir, what is this without consideration? So for example, ESOP will be like, I will issue the shares at concession price. Suppose if the market price is 100 rupees, I am giving at, for example, like 40 rupees. I am giving at 60 rupees with my pocket I am taking. Correct? So that means for each one, for example, 100 shares I am giving. 100 shares I am giving at 40 rupees. But market price is 100. Correct? So that means 100 shares I am giving at 40. So 100 shares into 40. So it will be 100 into 40. They will give only 4,000 rupees. 4,000 rupees they will give to get 100 shares. Correct? If the same 4,000 rupees, if you would have taken to market, how many shares they would have got, we have to compute. If they would have got for market, so in market, if it is at market price, number of shares that could purchase in market, it will be 4,000 rupees divided by 100. They would have purchased only 40 shares. But how many number of shares I am issuing? Number of shares issuing, it is 100. So therefore, what is number of shares issued at free of cost or without consideration? Without consideration, it is 100 minus 40, it is 60 shares. this 60 shares will come here, not complete 100 shares of ESOP. No, only number of shares issued for other than consideration, that is a free of cost. Because of that free of cost only, dilution will occur. Numerator nothing will increase, but denominator alone will increase. Yeah, up to this it is a common between AS-20 intermediate student as well as final financial reporting in AS. It is the same, but in AS one extra point is there, one extra thing. So that is what extra thing is there. So that is in a numerator. So profit from discontinued operation. Profit from discontinued operation. So this is Ind AS 105. In Ind AS 105, so there is a discontinued operation is there. That is current year. It is a current year that operation was there, but from next year onwards, it will be discontinued. Suppose if it is discontinued, means current year what profit I have earned out of discontinued operation, that will not be there in next year. Correct? So because of that, what happens? Out of current year profit, what I am taken from next year onwards, that profit numerator, this discontinued operation portion of profit will not be there. Because of that, profit will be reduced, but number of shares will be same. Because of that, EPS will be reduced. So this also will come as an additional point. So except that, so other things are common between both standards. Now, so these are the three categories, my dear friends. If it is separately in a one problem, suppose if it is only preference shares exist, or convertible debentures are exist, or ESOP is exist, yeah, we can easily compute any one directly. We will go for computation of diluted EPS. Suppose if all three are exist in a one problem, yeah, we could not take a decision as ad hoc. So first I will put convertible. First I will take convertible debentures. First I will take convertible preference shares. Thereafter I will take ESOP. This and all I can't take. First you have to check how we have to sequence. Suppose if I go for conversion, because of converting whom, how the impact will be on EPS. Because now look out. Suppose if convertible preference shares are huge, because of them huge amount of dividend will be saved. Because of that my profit, that's a numerator, will increase. So because of that I may end up by anti-dilutive. That is, I may end up by, when compared to previous basic EPS, after conversion might be a lot of dividend might be saved. Because of that I may end up by surplus. Or debenture interest, I have a lot of debenture interest. So after they converted into equity shareholders, debenture interest, lot of debenture interest has been saved. Because of that, what happened? My profit will be increased. So because of that, I may end up by negative EPS. That's what anti-dilutive EPS. So in that case, so there is no concept of EPS. So that means it may fluctuate. So therefore, which potential equity shareholder has to be sequenced first? So such a problem was a very rare case, but very highly technical and important area of the examiner. So today let us discuss that. Out of that, so this is the explanation for potential equity shareholders, but the problematically, let us see if in a one problem, if all are exist, whether it's a equity share, potential equity shareholders such as convertible preference shares, convertible debentures, ESOP, if it is exist, how we have to go for computing EPS and their disclosure in a balance sheet. Yeah, come on, quickly. Let us go to the problem. Yeah, so it is Ind AS from final I have taken, but the same question is applicable for AS-20 also, advanced account student. So this is a similar question as asked in financial reporting in final in a previous attempt. So this also the same model of problem has been given in RTP May 18 also. Now, capital structure of the company is given below. Equity shares numbers, 1000 lakh numbers are there, and in lakhs 10,000 lakh rupees capital is there. 9.5 convertible preference shares, each convertible into 6 equity shares. So that means this first equity shares, what we have, my dear friends, this equity shares, what we call it as, this is existing equity shares. Yeah, so suppose if I want basic EPS, means that is a profit available to equity shareholders divided by this existing number of equity shares, I will get basic EPS. Yeah, now on account of 9.5% convertible preference shares, yeah, it will be a potential equity shareholders. Because of him, diluted EPS will occur. So that is existing is 100 100 lakh preference shareholders are preference shares are there, each will be converted into 6. So therefore, if 100 converted into 6, it will become 600 lakh shares. Along with equity shares 1000, it will be 600 lakh equity shareholders will occur. So because of what is the savings, this we have to check out. Next, 12% convertible debentures, each convertible into 4 equity shares. So therefore, existing 500 lakh number of debentures are there. If that 500, if they convert into 4 equity shares, it will become 2000 lakh shares. 2000 lakh shares. Next, share options, each option carry exercise right of 100 shares at 15 per share, average fair value of equity 20. So this is market price. In market price 20, but I am giving at 15 rupees. So therefore, for share options, how much actually we are issuing for the consideration other than cash? So 100 into 50. 100 into 50, you have to multiply 100 lakh, look out, 100 shares each at this number of share options I have given was 1 lakh options. So therefore, you have to multiply 1 lakh options into 100 shares. You will get like 100 lakh divided 100 lakh into 15 rupees. That is what's the price. So that price you have to compare with market. So that is 1 lakh options each 100 into 20. How much you will get in a market? So minus what actually you are paying. So you will get what is considered, that is a shares issued for consideration other than cash. So that in a computation, let us do it. Now, my dear friends, let us next. Net profit after tax attributable to equity shareholders is 1500 lakhs. So net profit after tax, that's a profit after tax attributable to equity shareholders. That means, can I say this is profits available to equity shareholders? Profit available to, because net profit attributable to equity shareholders, therefore it is called as profit available to equity shareholders. Tax rate 38.5% is given, and dividend distribution tax is 10%, but now dividend distribution tax is removed. Dividend distribution tax is removed because of amendment. Compute diluted EPS. Correct? This is the question. So this easily it can be asked for 8 marks. Such a wonderful concept is there. Now, because of on conversion, my dear friends, on conversion of debentures, what is the savings? What is the savings? Just for understanding, let us compute it. So equity shares, that is a 10,000 lakhs is there into 9.5. Into 9.5% dividend, 950 lakhs will be saved. All rupees in lakhs, therefore 950 lakhs dividend will be saved. So that amount will be added in a numerator, increase in profit. That is, if preference shares are not there, obviously that dividend will be saved and it will be available for equity shareholders. Then 12% convertible debentures, 25,000 is there. So 25,000 into 12%. 25,000 into 12%, it will be 3,000. It will be 3,000, but on that tax savings and tax benefit, 38.5% tax benefit is gone. So therefore, minus, so this is 100 minus 38.5%. So 100 minus 38.5%, you will get 61.5% is tax. So therefore, into 61.5%. So 3000 into 61.5%. You will get 1845 is the savings in interest after tax. 1845 is the savings after tax. So using this, my dear friends, but because of ESOP, savings is nil. Only number of shares we will increase. That number of shares we will compute in a computation. So that's all. Using this, let us go for solution. Come on. Let's go for solution. In solution, my dear friends, here we have to follow almost 3-step approach. First one, you have to compute. If you convert, that is a preference shareholders, if it is converted into equity shareholders, how much is savings and how much number of shares will increase. So by comparing this, you will compute what is incremental EPS. Yeah, so incremental EPS. So least incremental EPS will amounts for highest dilution. So based on this, we have to sequence it. Let's go. First, solution. So this is for sequencing of EPS we are discussing. Now, step one, computation of incremental EPS. So we have the three steps. One is computation of incremental EPS, and step number 2 is ranking for sequencing. Third one, computation of EPS based on sequence. Thereafter, disclosure normally. So now here we have first is particulars. Then we have incremental earnings. Then we have incremental number of shares. Then we have incremental EPS. Incremental EPS. Now, to start with, first one, let us go for on conversion of preference shares. How much you had on conversion of preference shares? What you had first is conversion of preference shares. 9.5% convertible preference shares. Existing is 100 lakhs are there, each converted into 100, and 10,000 lakhs is the price. On that 9.5% dividend will be saved. So using this, let's go. First is number 1 on conversion of preference shares. So incremental EPS, incremental earnings, how much will be saved? 10,000 lakh into 9.5%. So therefore 950 lakhs profit will be saved. And number of incremental number of shares, it is 100 lakhs into 6 equity shares. Therefore 600 incremental shares will be increased. So because of that, how much is the incremental EPS? 950 divided by 600, you will get 950 divided by 600, you will get 1.58. 1.58 approximately is the incremental EPS. That is, on account of conversion, this it will be incremental is there. Next, second one, on conversion of debentures. If debentures are converted, so you can see that 12% convertible debentures, and each converted into 4. So existing is 500 lakhs are there. If I convert into equity shares, each will be converted into 4, and on 25 lakh is the capital. On the 12% interest what we have paid, that will be saved. But if I pay if I save the interest, but on that tax benefit will be foregone at 38.5%. So based on that, we will go here. So on conversion, the incremental profit is 25,000 is the capital into 12%, you will get 3,000. But on that, less tax benefit foregone, tax benefit lost at 38.5%. 38.5%. So which is 3,000 into 38.5%, it is 1155. So therefore net savings is 1845. So therefore 1845 is the incremental EPS, incremental earnings, and the number of shares are 500 into each converted into 4. So therefore 2000 shares has been increased. So therefore, what is incremental EPS? 1845 divided by 2000, you will get 1845 divided by 2000, you will get 0.92. 0.92 is the incremental EPS. Like that, third, on conversion of on exercising ESOP. If ESOP has been converted into shares, so here savings will be nil. Nothing. But how many number of shares will increase? So that you have to compute here. Now, number of options first is, so on account of options, how much will be? So number of shares. So number of shares issued. Without consideration. So that's what we have to compute. So now let us go for each. So each we have given 1 lakh options into rupees 100 into exercise price rupees 15. You will get 1500 lakhs is the exercise price. With the same price divided by fair value of market rupees 20. If you divide, what is number of shares that could purchase from market? Number of shares purchase from market, it will be 1500 divided by 20. You will get 75 lakh shares. Yeah, but number of shares issued is equal to 100 lakh. How 100? 1 lakh options into 100. So therefore number of shares issued for no consideration, it is 25. 100 minus 75 lakh shares. So therefore here 25 lakh shares you have to take. So here incremental EPS is nil. 0 by 25, it will be nil. These are all working. So now this is what step 1. Now using this we have to go for step 2. What is ranking? Step 2 is ranking. Step 2, ranking for sequencing. Correct? So ranking will be given based on highest incremental EPS denotes lowest dilution. So here ranking will be given based on dilutive effect. And note highest incremental EPS denotes lowest dilutive. That is, highest increment means because of that dilution will be lower. So therefore here for sequencing for dilution we have to give least incremental EPS will given highest dilutive. Ranking is based on, therefore ranking is based on least incremental EPS amounts for highest dilution. Yeah. So therefore rank 1 convert EPS because highest dilution, Next rank 2 you have to give convert preference, I think second is which one? Look out. First is this is what first, then this is what second, and preference shareholders for third priority. This was the sequence. Yeah. So first is EPS convert. I'm sorry, not EPS. ESOP. Second one, rank 2 is convert debentures. Then rank 3 is convert preference shares. So in this order you have to take. In this order you have to take. Next, so based on this ranking, you have to go for conversion. That is, if existing shares are there, for that EPS you will calculate, that's a basic. Thereafter, you will convert ESOP. So because of that, incremental EPS and incremental number of shares you will calculate, and you will compute EPS. When compared to previous EPS, if it is reduced, then it is called dilutive. Like this. Now let us go for step 3. Step 3, calculation of diluted EPS based on sequencing. So here, my dear friends, this is what actually required solution. So here first is format. You have to take, first is particulars. Thereafter you have to take cumulative profits available to equity shareholders. Then you have to take cumulative number of equity shares. Cumulative number of equity shares. Then you will get EPS, earnings per share. Then you have remarks. So now particulars. So now first is on equity shares. So existing profit available to equity shareholders is 1,500 lakhs. They have given 1,500 lakhs. Existing number of equity shares are 1,000 lakhs. So therefore EPS is 1,000 divided by, so if you want column number you can give it. So column number 1 and column number 2, EPS is 1 divided by 2. 1,500 divided by 1,000, you will get EPS is 1.50. This is called as basic EPS. And second one, so what is the rank? First is you have to convert ESOP. So because of converting ESOP, in step number 1, what is the incremental EPS? This table will work. Incremental EPS, it will be nil. Incremental EPS will be nil, but denominator will be increased by 25. Denominator will be increased by 25. So like this, numerator as well as denominator, you have to keep on increasing. So therefore here on conversion of options, 1,500 plus 20 plus profit is nil. So therefore same 1,500, but number of shares is 1,000 plus 25 will increase. So therefore it is 1025. So therefore EPS is equal to 1,500 divided by 1025. You will get 1.46. When compared to previous year, it is reduced. Therefore this is called as dilutive EPS. Next, number 3. Next sequencing is second rank is after ESOP is converted, you have to convert debentures. On conversion of debentures. So here how much it will be? 1,500. So on conversion of debentures, how much will be the incremental earnings? 1845, and number has been increased as 2,000 shares are increased. So therefore numerator will increase by 1845, and shares existing when compared to previous after conversion of ESOP, 1025 will be there, plus 2,000 shares on conversion of debentures will increase. So therefore in total 1,500 plus 1835, it will be 3345, and the number of shares will be 3,025. So therefore EPS 3345 divided by 3025, it will be 1.11 rounded off. 1.05 you will get, but rounded off it will be. When compared to previous one, it has reduced. Therefore, it is called as dilutive. It is also called as dilutive EPS. Dilutive EPS. Next, number 4. On conversion of preference shares. So when compared to previous, accumulated was 3345 plus. So here 3025 plus how many shares and how much profit. On conversion of preference shares, your profit will be increased by 950 and the number of shares will increase by 600. So therefore 950, 600. So 950 profit will increase and the number of shares will increase by 600. So therefore 3345 plus 950, you will be 4295, and 3025 plus 600, it will be 3625. Therefore EPS is equal to 4295 divided by 3625, it will be 1.18. It will be 1.18. When compared to previous one, it has been increased. So therefore this is called as anti-dilutive. So therefore anti-dilutive EPS not to be disclosed. So therefore disclosure in balance sheet, you have to disclose both the EPS. First is basic EPS rupees 1.50. Then diluted EPS on conversion of options rupees 1.46 dilutive, and on conversion of debentures, it is rupees 1.11 dilutive. That's all you have to disclose. Yeah, anti-dilutive not to be disclosed. Anti-dilutive EPS not to be disclosed in balance sheet. Yeah, because it is against conservatism concept, anticipated gain. That should not be disclosed. Here, so this is the concept of anti-dilutive in case of if it is more than one potential equity shareholders, diluted EPS. If it is more than one equity shareholder, one potential equity shareholders, how it has to be sequenced. It is a 3-step based. One is for computing incremental EPS and ranking based on the least incremental EPS will amounts for highest level dilution. Therefore, in that order we have to dilute. Thereafter, going for sequencing for dilution. Hope you had got the little conceptual clarity on this sequence and you have enjoyed the video. So if you like my classes and my lecture, please refer my classes. My upcoming final classes at Sampath Academy starts from June 5th. So completely it's a live batch. So from across the globe, anywhere you can join the class and you can enjoy from your home. So it will be live interactive classes, live session, recordings will not be provided. So completely it is like face-to-face live interactive virtual classes. So you won't be regretted, conceptual clarity will be assured. So thanks for watching my video. This is CA.MURALI signing off, and I will meet you in next wonderful video. Thank you.